week, 375 on KSS and 222 on plug. So definitely be checking that out today. I know that some people are on vacation. They're coming back from some are coming back. My daughter just decided to travel down to see her grandparents, and she is 8. She didn't go by herself. My wife took her down and flew back, but that's where we are. We're kind of wrapping it up as the summer comes to a close. We'll be at Labor Day, and then we'll be at the most volatile period of time, the next 2 to 3 weeks historically for the market. But again, some people coming into the room right now, a little bit of, give people a little bit of time to check in as, again, we'll be talking about a trade on India today. Wow, of all things, but there is positive news coming out of one of the largest emerging markets. We'll be doing the runner, which is our new feature. This is the 5th issue that we have done, and we've seen some very solid moves on some of the names that we've listed, including the name that we had last week that is now up and seeing insider buying. You'll get access to that at 9 o'clock, so stick around, and we will be talking about breakouts and breakdowns. But as we've said, why are you with us? Why do you come each day? Why do you need to be in this room at 8:45? And it's okay if you're here at 8:47. I forgive you. But we're going to talk about the stocks actually worth engaging today, stocks actually worth being traded today, because, again, if you're not paying attention to what's going on pre-market, you are the exit liquidity for this market. And we're already seeing all this chatter about, the futures are going to just continue to rip higher. Well, we start to see a little bit of weakness in some certain places that we'll discuss momentarily. And we have a massive event coming up this week, huge catalyst. 3-day event coming on the 21st through the 23rd, the Jackson Hole. We will be discussing various strategies and various opportunities for you as you assess what this market is going to be looking like in the next 2 to 3 weeks, particularly as we head into September, and where the smart money is moving. And we're seeing rotations right now. We'll be breaking that down as well. As always, we start with momentum. And as we are looking into up toward Jackson Hole this week, markets are bullish. And you saw, if you've been watching the last few weeks, the number that is on the left side, that 15, is an intraday momentum reading that we utilize to understand where capital is flowing in and out of the S&P 500. We are looking specifically at the number of stocks that are breaking out in very specific mathematical conditions and stocks that are breaking down. If this goes negative, we pay very close attention to the Magnificent Seven, 20-day and 50-day moving averages. We pay very close attention to the VIX, and we look at what we have described in the past as the FNGD, which is effectively a leverage tool that we are witnessing just to see if there's something deeper happening in the market. Well, money flew back into the S&P 500. The Russell 2000 turned positive last week. And it is kind of all systems go at this moment. We're about 6% from the 20-day moving average on the FNGD. And that is that inverse tool that we talked about. When this breaks above its 20 and its 50-day moving average, that's where we're concerned about something more significant in the market. But as you can see, we just continue to see decay in this, and that is bullish for the time being. And we will continue to monitor that as we move deeper into the August session and the September session. In addition, just real quick, just to remind you, throw some tickers into the chat. If we have time at the end, we'll take a look at them, see what they're breaking out and breaking down. And we'll talk just briefly in the next 10 minutes before we get to the runner about the key macro things for this week that I think are just absolutely essential for you. So the first thing is globally, this is one of the things that has been very difficult for people to try to wrap their heads around. The S&P 500 is at an all-time high level or near all-time highs. You have the NASDAQ at all-time highs. You have the Dow, looks like it's just going to chug right to 50,000. But meanwhile, abroad, you have all-time highs in Japan and you have all-time highs in Taiwan. And interestingly enough, as we have said, capital in the global system continues to expand. The MT2 Global continues to expand. More money, more capital, more leverage finds its way into risk assets. And right now, as we look into the Fed meeting that is coming up, the Nikkei and the Taiwan main index are at these fresh peaks, while China's blue chip stocks are hitting their highest levels in 10 months. And the fuel behind this move is not just the liquidity, but also the expectations around what the Fed will do during its September meeting, what the speech will be like this week at Jackson Hole, and of course the strong corporate earnings that have been permeating through this earnings season. We have a lot of earnings this week, a lot of retail focus here in the U.S., and that can change sentiment on a dime. But traders are pricing in almost an 85% probability of that rate cut in September. That number was 99% at one point last week. It has pulled back because of the PPI number, but there is still very dovish momentum all across the globe. And the other thing just to keep in mind is the S&P 500 companies and their earnings. They've reported double-digit EPS growth year over year, and that's telling the market that corporate America is still relatively resilient, and Asia's exporters are actually feeling that lift. Tech in particular, Taiwan Semiconductor, SONY, and the other exporters that are linked to the global chip and device supply chain, they're riding the wave on positive policy decisions. The key thing you're going to want to be watching as we move deeper into this period is the TLT, which is the 20-year Treasury bond ETF. Again, you're paying very close attention to see what happens with U.S. bond yields. They've nudged higher on fiscal and inflation concerns, and that could be the counterweight here. But for now, the message out of Asia is that globally risk is on right now. And you look at the EWJ, which is the ETF around the MSCI Japan, you are looking at obviously fresh highs. So risk is high, risk appetite is high, and traders are very happy to continue to ride this momentum into Jackson Hole. But I will note, just pay very close attention to the fact that we are overbought on this RSI as well. It's a good day for global stocks. And again, here's another one. And this is the Morgan Stanley India ETF trying to crack back above its 20 and its 50-day moving averages. And it looks like it's going to do pretty well because, again, we shift to India and the story there is policy and more reform. The Nifty 50 index punched above its 25,000 intraday, and the Sensex gained more than 1,000 points. And we don't usually talk a lot about foreign markets, but I think it's very important to keep a very close eye on the fact that capital is flowing all around the globe. There's strong momentum and there's policy initiatives that are shifting right now, particularly in bilateral trade, and there's going to be winners and losers along the way. They're seeing GST reform momentum and credit upgrades in India. They got a bump from the S&P Global, which increased their sovereign rating, and that's a green light for foreign capital. And that's bullish for the IIF. And, we hit this recent point at 27. The opportunities on trading some of these, more foreign indices and some of these other foreign stocks like Tata Motors or ICICI Bank. This is just one of those opportunities that you're seeing momentum on this side of the world. So HDFC Bank, ICICI, I'm not even going to try to pronounce it, Tata Motors, and Reliance. People are looking for emerging market rotation and are finding reasons to put India front and center today. One of the things that I look for in this case is taking a look at the INDA and just trying to quickly and quietly trade it if we can push above these 20-day moving averages, and then obviously looking for different types of options trades around these indices. On top of that, the other thing to be paying very close attention to is this very subtle move down on Nvidia. Now, it doesn't really tell us a whole lot at the moment, but Nvidia is slipping on chatter around the Rubin chip production type timeline, and analysts are seeing still see the 2026 rollout on track. Why does this matter? Well, this is the most important stock in the AI trade, and it's stumbling a little bit. Shares were down, not much, but it's just this mild pullback from Friday, and we want to pay attention to this Rubin trade. The market is obviously hanging on every single AI headline that there is, and that is enough to move billions of dollars in market capitalization on all of the five stocks that you're seeing below. Nvidia, SMH, which is the semiconductor ETF, Broadcom, AMD, and Taiwan Semiconductor. The nuance here is that Jefferies analyst stepped in and they said that production remains on track for Q2 2026. Server volume deliveries are expected later in QE of the same year, 2026. The pipeline's intact. It's just that the noise might be shaking out some of the short-term hands. And keep a very close eye just on the 20-day moving average. If it bounces off that 20-day, whether or not it's going to hold that support, it can obviously lead to yet another move higher, another leg higher. But that is a key line in the sand for Nvidia over the next couple of days. So again, the three key things to be focusing on here are Fed optimism, India moving on reforms, and Nvidia stumbling on this chatter. And they're all very different stories, but they're definitely all pointing to the exact same catalyst, and that is Jackson Hole. Now, if we move into looking at the Mag 7, which is MAGS, the round hill, you're seeing, again, continued strength in momentum heading into the Jackson Hole Symposium, which, again, kicks off on Thursday, the 21st. It is a three-day event that happens in Jackson Hole, Wyoming. It is bringing together global central bankers, economists, academics, and market participants. And we have had a couple of very significant events that have transpired in the last 30 years that have really defined and reshaped markets. We had the 1993 period, which, again, I'm going back very far, but I just want to point to very important events have come out of this. Effectively, inflation targeting, which drove the markets in the 1990s and continues to remain a very important policy in central banking that helps lift capital globally and lifts markets higher, came out of the 93 session. In 2010, that was effectively where Ben Bernanke, then Fed chair, admitted they were engaging in inflation targeting. And then in a couple of years later, effectively committing full-time to quantitative easing as the mechanism to continue driving markets higher and to keep bonds stabilized here in the U.S. financial system. And then in 2022, Mr. Powell showed up, gave a little bit of a speech that the market was not expecting, and the markets absolutely bombed into October, which developed the gilt crisis that was transpiring in Europe at the time. So we are a world that is perpetually on edge. We continue to see these big moves down, insiders stepping in and buying, market stabilization, executives coming in and buying their stock, Fed or Treasury providing accommodative policy, and the market rips higher. This was a major event, obviously, that happened in March and April. This was a big market event that happened last year, the Nikkei crash. It was the largest downturn since 1987. We had multiple other events like this as well. Big move down back in 2023, a big move down that had happened in June 2022, which was the largest hedge fund sell-off in 15 years. And then, of course, you had COVID, which you all definitely remember. But that, again, was also an event that was not necessarily driven by policy, but driven by the fact that leverage in the financial system unwound very, very quickly. And markets began to sell off well ahead of before, when everybody really understood what was going on. The sell-off for COVID started on February 21st, 2020. The shutdown of the economy didn't come for another month. So it's always very important to be watching a lot of these key moving averages to get a good sense of whether or not leverage is leaving the system and what expectations are. Powell is going to speak. It's going to be a very important keynote. Markets will await guidance on this from the Fed's path forward, especially on rate cuts. Given conflicting signs on inflation and jobs data right now, how Powell can thread that needle will be very important. Evercore, one of their top analysts, said that without a dovish signal this week from Powell, the markets actually risk about a 7 to 15% drop by the fall, even if headline PE ratios are near that Y2K era highs. And as a long-term pivot point, which is one of the things we're looking for, this is Powell's probably most consequential Jackson Hole because, again, he is expected to be wrapping up his term in 2026, and markets are looking for signals that protect the Fed's independence despite all of the ongoing political pressure that we have been hearing about for the last couple of months. So, unexpected star of the event. There might be a little bit of a bat problem there, just so you know, but there's no health risk. It's just an odd twist to the high stakes setting that is this upcoming event. All right, it is 9 o'clock, which means it is time for us to drop, if you were the very first time that you have been here, what we call the runner. This is a daily cheat sheet that we put together here for this show. And again, you can only access it if you are here between 9 o'clock and 9:20 each day. The key thing that we're focusing on is the stocks that are breaking out and the stocks that are breaking down. And if we look at this list, you saw on Friday we had a couple of different names on it, and we were talking about United Healthcare. Well, once again, as we see on Friday, I'm going to go through Fridays real quick. UNH had a nice little pop. We also had CRISPR, CRSP, which was on our list as well. CRISPR Therapeutics, still chopping above that 20-day moving average. And we had PANL as well, Panagea, which again remains strong, and we're looking for a continued lift on these names. We were also looking at FPH, Green Brick, AAT, and AIG. And just to continue to remind you that these are stocks that are still trading around these key moving averages, and we're still looking for a continuation of that momentum. But if we look into today, what do we see as potential breakouts? We start with IQV. And IQV, which is Equivia Holdings, still pushing above this 20 and its 200-day moving average. This is in the healthcare sector, and we're seeing capital money starting to flow into into the healthcare sector right now on rotation. Specifically, as I noted, healthcare is showing leadership right now, while defensives are sliding due to pressure. You see the little move here. Healthcare continuing this very strong momentum. 1 week performance of 5%. And one of the key places for us to be paying attention is the LABU, which is the bullish ETF around biotech stocks. When we see the LABU move higher, we are always watching one of the very important horses that are at the bottom of the runner, and that is the RXRX. This is Recursion Pharmaceuticals that, again, is now hovering around its 20 and its 50-day moving average. This is a very strong AI discovery stock. It is still starting to draw in institutional flow, and I like the stock toward the upside as it breaks these moving averages. You could see that this stock can see some very violent moves higher when we get above those key moving averages. And if we don't stay above those averages, simply let it go. It's a great momentum stock to trade. It's drawing institutional flow, and we're starting to see some volume return. I'd like to see the MFI on this, which is the money flow index, pushing back above 50. But for the most part, RXRX is a name that has definitely caught my attention as well. On the bearish side, on the bullish side, one of the other names I did want to note is Lumen Technologies. Lumen is popping both above its 2050 and 200 today, and this is on one of the breakout names. Why does this matter? Why is it so important? Well, one, we had it on our list last week. It has seen some strength coming off of that 380 level. It's pushed to 450 since we hit our radar, but this is the next story right here. This is insider buying on Lumen Technologies. Again, we're focusing on this bigger story around fiber optic. The CFO of the company, Christopher Stansberry, buying $357,000 of his own stock at 436 a week after the CEO bought it at 370. So again, the CEO buys the stock at 370. The CFO, who knows the value of the company and understands the balance sheet, buying it at under 440. So willing to pay a premium to what the CEO bought it. As I'm looking at this, I haven't had a chance to really dig too deep into the options chain of Lumen, but it's one of those stocks and one of those names where I think if you look down around the $4 level, you could probably get a very good return just selling a put and doing a basic cash secured put where you are selling the put and putting up margin. I don't know if there's a $3 put. I don't know what type of spreads could be set up. But in this environment where the executives are buying their own stock down around these levels, I say if you can, try to sell premium, sell spreads down here instead of trying to ride momentum higher. It might be an interesting long-term stock in the communication side, but once again, we have these questions around what's happening with Jackson Hole. This is a environment, particularly heading into September, where we're all on edge. So why not utilize the strength of the market in any particularly higher implied volatility, if you can find it, to sell below or near where those executives were buying their own stock at those specific levels. It's a different strategy and a more unique way to approach these markets. And remember that you don't have to just try to chase momentum to the upside. You can focus on a higher probability trade if you focus simply on premium. So on this note, I'll take a real quick look and see if we can do this. I have not spent a lot of time digging into the options chain on this, but if there is a trade here, we will hopefully find out, because this thing likes to take its time. Looking out, yeah, it's there. It's not great right now. Let's see, October. So something along the lines of, if you could sell the 4 and buy the 350, this is kind of what it looks like. It's actually an interesting setup. Your break even becomes 388, which is where right, I mean, a little bit higher than what the CEO bought it for, but you could see you're putting up 38 on each contract that you sell to make 12. That's a 37% return, 32% return, 188 annualized, 388 break even, and 76. And if you have to take possession of the stock, you're doing it down under where the CFO bought it. Just a different way to trade it. This is the October spread, the October 17th, the 4-350 put spread that you could sell. And if you went out further into, say, December or maybe even January, that's where you're probably going to see a little bit better opportunity. And from there, what you can do is sell the 350 and buy the 250. And that'll produce an interesting trade as well, where you're making 25% at an 82% probability of profit, $80 to make 20. And once again, your break even here is 330, which is well below where the executives bought the stock at 363. You don't see a ton of insider buying on this stock, so anytime that you do see it, it creates for a unique opportunity. And just to showcase this, again, making 25% on the trade rather than looking for something else that you're looking at a much lower probability of profit. If you were doing a long call right now on LUMN, just to show you kind of what your odds are and your probabilities are, if you bought, say, the September, let's go out to the September 19th. If you go out to September 19th, the $4 call is currently at 56. I don't believe that. But that said, I would say it's because the stock's up today. So this is based on pricing from 440. %40 probability of just staying in the money at the $4 level. And if you go out of the money at, say, the 450 level, I just want to point out the pricing of this. You're only down to a 30% probability of profit, and you need the stock to move quickly. So that's the difference between selling premium and trying to trade to the upside. And again, I like the idea of being of trying to sell a spread on some of these names like Lumen and some of the stocks that are seeing the insider buying pressure, instead of just trying to go one directionally. On stocks that are breaking down, no shock here. We've talked about Roblox. This has been one of those names that if this breaks under its 50-day moving average, it's got a ways to go. This is one of those companies that is completely unprofitable, trading at 20 times sales in an environment where rates remain elevated and questions abound about their overall business model. So if we look at this and you see that 112 level, that's where I would be looking to go to the downside. And once again, if we do have that type of big move that was projected by Evercore without a dovish signal from Howe, this has relatively sizable downside. So we've seen some moves from 80 down to 50. We've seen other moves in the past where you get in this environment where the rate cuts aren't coming and there's deeper concerns about the business. Well, this is one of those right now, right? 140 has already taken us down to 117. You've got much more downside, especially if RSI, MFI, and all of these other indicators continue to break down. And once again, I already talked about LABU. Just looking at LABU heading into this week, a lot of momentum remains in the healthcare side, and there's still plenty of opportunity ahead. Finally, EMO, ERO, which is Aero Copper. This is one of those names as well, right? Just trading around 20-day moving averages. Copper mining positioning is more, that macro rotation that we're always constantly looking for. And we've seen some improvement in materials. This breaking above its 20. And again, I go back to the key indicators that we're watching. RSI, MFI, MACD, all positive, looking for a positive move here on the ADX. But just right here, your line in the sand becomes $14, and you're trying to ride these names higher. It is 9/11. Chris Hansen. Okay. Just taking a real quick look at the screener, there really has not been a lot of insider activity in the last couple of days. We've been watching names like Asana continues to get some buying pressure. We continue to see some names like Amrise, but just for the most part, it's really been weak. And one of the things that I do want to point out as we wrap up this session, and what I'll be talking about today at 12:30 in the member room, is companies like Blackstone Minerals. It's always bullish and it's always positive when we see the purchasing of this company, particularly by Thomas Carter. One of the things that we're going to talk about today is the fact that we just had 13Fs released last week, and there's always a constant focus on Warren Buffett. Always a constant focus on what happens at Berkshire Hathaway and the type of investments that they made. Over the weekend, I wrote about what made Buffett successful and what made Buffett not successful in these markets over the last couple of years. And the primary focus here is the ability of the company to buy into assets that are cash rich and have very high capital efficiency. Buffett got away from that when he started to invest in a lot of different energy names. He got away from that when he was buying into very capital intensive businesses. And we just saw a lot of focus on Domino's and Pool Corporation, which is a niche pool maintenance company that really goes back to the basics for Berkshire. But the way that I view this market and the way that my expectations are moving forward, I think that there's really only two real places to be really constantly focusing on where to put your money and where and why and how. And I've talked a lot about trading the S&P 500 in a crisis environment. We have seen, and I've walked through this pattern multiple times, you have these big liquidity events that have transpired, and we've had at least one of them since 2020 every single year. We just had a one that just happened a couple of months ago. We sold off. We saw no buying pressure. We had a short squeeze. We completely dumped. And then we had a combination of two things. One, massive levels of insider buying, and also a policy accommodation that helped lift this market up. Momentum returned, and the markets have defied reality for a lot of people over the last couple of months. But on the other side of that is a different model. And it's really built around the ability to generate a lot of cash off of capital efficient assets and cash flow and cash streams. Where is money going to be coming from? Well, again, I go back and I look at some of these names like Blackstone Minerals, which is paying around a 12% yield. When this CEO steps in, it is typically very bullish for the company. One of the key concerns with a name like this is the very fact that people are worried that this dividend will go away. Well, this is a sign of confidence that this dividend is protected because, again, as you can see, two big purchases by Thomas Carter, one at around 113,000 and one at 879,000, as we pulled back to around that low 1218 to 1236 level. Why do I care about this? Well, there's two important things. One, this fits the broader thesis when we talk about companies that are that are very heavy cash flow, that are really focusing on buying cash flow. Franco Nevada, for example, is a company that does not actually mine gold. They just are focused on royalties from the from mining, and they're kicking off cash in the process, and they're benefiting from the mining operations all across the globe. These are really the pure play type of Buffett strategies that I foresee being successful and continue to be successful in the future. And on top of that, when you have a company like BSM, which is, again, very heavy cash flow organization, what's nice is this allows me to get cash that is kicking off at an 11% level, and that gives me capital to trade. And there are plenty of these names, plenty of these companies, and they align with my bigger and broader view of the financial markets, that you want to own these very capital-rich assets that don't require a significant amount of capital intensity. And you take that money, and that's what you trade. So you can either be a crisis investor and really look for these once-a-year opportunities. And there was a great interview that I just watched the other day about a guy who's basically just turned to doing that and made 534% just trading the macro on what the Fed is doing. And that is easy to replicate, but you have to be patient and wait for these events to transpire once or twice a year and then follow the pattern. Or you look for these very specific companies that all have the exact same qualities, and you wait and you wait and you wait for their executives to step in and buy their stock, because, again, it is a sign of confidence moving forward. Would I buy BSM today? Yes. Yes. Based on this, based entirely on Carter buying his stock. And there's a lot of names like this that you always want to focus on, because when you see that buying, it is extraordinarily bullish. Energy Transfer has not seen insider buying for the last year. But when Kelsey Warren steps in, that is a deep sign of confidence. And when you see insiders buying at massive clips last year on Comstock, we saw Jerry Jones step in and buy $100 million of his own stock in a stock that everybody was looking at and saying, this just isn't a, was it Comstock? I might be off. I think it was Comstock. Yep, it was. Bought his stock at $8, and everybody said this is a terrible balance sheet. Well, it went to 30, and it's pulled back since, but it went to 30, and it maintained very strong momentum. These are the types of names that you're constantly looking for. All right, it is 9:18. We didn't get a chance to dig too much into tickers. I did get somebody ask about ORA. This is another Ormat Company's utilities. Again, looking strong, holding above that 20-day. Strength on the MFI. Looks like that histogram's about to flip on the MACD. Overall, positive momentum in utilities. And again, utilities are trading like technology stocks in the dot-com era. EV to EBITDA at 18. Well, again, these are momentum trades now. So this is something to trade above that 20-day moving average. Fascinating. Core Weave, same type of thing. Massive insider ownership, or forgive me, massive fund ownership and movement on this. This has really pulled back. I would not be touching this until you are back above those key moving averages. It's just one of those names. Aura is a great EGS play. Yes, that is in the world of geothermal, which will continue to gain traction in the months ahead. And Teva, very strong momentum, but just be very aware you're getting toward overbought on this on the daily. If you own the stock and you're pushing up toward these recent multi tops that we have seen, especially going back to February as well, Sell calls to the upside. Healthcare remaining very strong. This can break down very quickly as we move further. All right. Everything else he owns is private. That's very true. All right. Once again, freeze points. Look at that. Gianni coming into the chat right now. Click on that as well and check out Ghost Prince, the surveillance console. One of the things I've been using, and it's helping to align us and give us conviction on a lot of the names that we're focusing on here with the runner and the other ideas that we'll be focusing on today at 12:30. Don is going to be coming up in a moment to throw some music on and to guide you through the opening hour of what will be a fascinating macroeconomic week. I hope everybody has a great day. If I do not see you today, and you should be in that chat at 12:30, but if I don't, I will be back tomorrow for 8:45 for Market Masters. I hope you guys have a wonderful day. Talk to you soon.